Every hour of every day, hidden deep within a government facility, a seemingly magical process takes place. Paper is transformed into currency. Machines whir relentlessly, churning out hundreds of millions of dollars, a tangible stream feeding the vast economic engine of a nation. But what if this physical act, this visible printing, is merely a grand illusion? What if the true genesis of our money, the billions that flood our global economy daily, is a far more ethereal, more unsettling act? Imagine an unseen force capable of conjuring wealth from pure data, materializing it with nothing more than a few keystrokes. This isn't the stuff of fantasy, it is the fundamental, often overlooked secret of our modern financial system. Most of the money you earn, spend, and save exists only as digital pulses, numbers on a screen, multiplying by an astounding $4 billion daily. But if it isn't printed, and it isn't mined, then where, in this invisible economy, does our money truly come from? And what are the profound, unseen implications of living in a world where value can simply be typed into existence? To unravel this mystery, we must journey back to humanity's earliest attempts to quantify worth, long before the first coin ever glinted in the sun. Thousands of years ago, before the concept of currency took hold, the value was exchanged through direct needs. A farmer needing a new tool might receive it from a craftsman, not by handing over a cow, but by making a simple, solemn promise of future payment, perhaps a portion of his harvest. This fragile trust was the first invisible thread of value, a societal agreement that a future obligation held weight. This system, however, quickly buckled under the demands of growing civilizations. The world then turned to tangible solutions. Commodity money, grains, cattle, or the omnipresent glint of gold and silver became the universal language of trade. These metals, small, durable, and intrinsically desired, unlocked global commerce, transforming simple barter into complex markets stretching from ancient China to the bustling Mediterranean. But this era brought its own peril, the sheer weight and danger of transporting vast fortunes in physical gold across treacherous lands. Humanity needed a safer, lighter alternative. This need birthed the unsuspecting architects of our modern monetary system, the goldsmiths of 17th century London. Initially, they were merely secure vaults for the wealthy, taking in gold and issuing paper promise notes in return. These notes, guaranteeing the bearer could retrieve their gold anytime, quickly became a convenient substitute for the heavy metal itself. People began exchanging these notes directly in transactions, treating the paper as if it were gold. But then came the unsettling realization, a discovery that would forever reshape the global economy. The goldsmiths noticed that most people never came to claim their gold. Vast quantities simply sat dormant in their strongboxes. This insight sparked an audacious idea. What if they could loan out more promise notes than they actually had gold? What if they could conjure money from nothing? And so they did. They began issuing new, additional promise notes as loans, notes that were not backed by any physical gold they possessed. This was the true moment money began to be created from thin air. When a goldsmith loaned out notes worth 100 gold coins, their vault wasn't 100 coins poorer. They had simply written 100 new coins into existence. This phantom money entered circulation, driving trade, and when repaid, the goldsmith kept a tidy profit and interest. The terrifying truth was clear: more money now existed in the economy than there was physical gold to back it. A system built on trust was quietly, subtly, becoming built on an illusion. Fast forward to today, and the goldsmiths have transformed into the towering, gleaming edifices of modern banks. Their paper promise notes are now the digital digits on your screen, the billions of dollars that move instantaneously across the globe. But the fundamental principle remains eerily the same. When you deposit money into your bank, those numbers aren't physical cash tucked away in a vault with your name on it. Instead, they represent a debt the bank owes you, a digital promise that you can claim your money back. And here's the crucial, often missed point: when a bank extends a loan, they are not lending out existing money. They are, quite literally, typing new money into existence directly into your account. This is freshly created money, born from nothing but a keystroke and a new debt. Think about it: a new house, a new car, a new business venture. Many are funded by money that materialized at the moment a loan was approved. This newly created money flows into the economy, circulating through countless transactions, paying salaries, fueling industries, and driving what we perceive as prosperity. When the loan is eventually repaid, the principal amount of that newly created money effectively vanishes, disappearing back into the digital ether, with the bank keeping the interest as its gain. This seemingly miraculous creation of money from thin air is the very engine of our continuous economic expansion. Without a constant influx of new money, an economy quickly stagnates. Imagine a fixed pool of money being passed around. Eventually, it becomes unevenly distributed, stifling trade, reducing participation, and grinding progress to a halt. The continuous addition of new money acts as a lubricant, speeding up transactions, stimulating growth, and ultimately, allowing our civilization to advance and innovate at breakneck speed. But this powerful engine of creation comes with a hidden cost, a subtle erosion of value known as inflation. The core paradox lies here. While new money fuels activity, if it's created faster than actual goods and services are produced, prices inevitably rise. More money chases fewer goods, and the purchasing power of your hard-earned dollars slowly diminishes. Inflation is, in essence, an invisible tax, an unsettling consequence of a system designed for constant expansion. To manage this delicate balance, modern banks can create nearly limitless amounts of money. If their reserves run low, they simply turn to the central bank in the US, the Federal Reserve, for more. And this is where the web of money creation becomes even more intricate, intertwining with the very fabric of government itself. Governments, constantly spending more than they collect in taxes, issue bonds, essentially loans to finance their operations. These bonds are bought by banks, corporations, and even other nations, providing the government with immediate funds. This money flows into the economy, cycles back to banks, and on the surface seems like a normal transaction. But the chilling reality is that governments are perpetually, relentlessly, accumulating debt to those who buy these bonds. And to service this ever-growing debt, more and more money often needs to be created, pushing the cycle of borrowing and spending ever onward. Last year alone, a staggering $7 trillion flowed through the US government's hands, far outstripping tax revenues and necessitating more borrowing, plunging the nation deeper into this pervasive, invisible debt. It's a system of adding money through the very mechanism of debt, a financial architecture that underpins most global economies. It's not necessarily bad in its intent, as it's designed for growth, but its efficiency and ethical implications are constantly under scrutiny. Imagine if all this newly created money were consistently directed towards truly productive investments, education, sustainable infrastructure, groundbreaking innovation, rather than simply perpetuating a cycle of existing obligations. The story of money is not one of mining or mere printing. It's a profound tale of trust, of promises, of a historical trick that became the bedrock of our global economy. It is a system where value can be conjured from digital ether, where debt is the engine of prosperity, and where an unseen, constantly expanding flow of currency dictates the rhythm of our lives. We live in a world where the very definition of wealth is an ever-shifting illusion, created and controlled by forces we often fail to comprehend. The hidden machinery of money is just one of the many profound, often unsettling realities we explore. At Oddworld Files, we delve into the unseen forces, the complex systems, and the intriguing paradoxes that shape our existence. If you're fascinated by the mysteries lurking beneath the surface of our world, then subscribe and hit the notification bell to join us on our next deep dive into the strange, the unexplained, and the profoundly real.